Who's excited for this week, folks? After the worst week for the market, and especially the Nasdaq since September, as investors fear rising bond yields and early signs of potential inflation that could perhaps lead to interest rate increases. And as you have the Fed saying, oh no, don't you worry about that. We won't be raising interest rates anytime soon, and we aren't worried about inflation. Well, now we're in the situation where we have a lot of mixed opinions on where the market is heading. The eternal bears, of course, want you to believe that a speedy recovery will crash the stock market because of said inflation. Then on the other side, the eternal bulls are saying, don't you worry, this is a short-term correction and it's going to be a great buying opportunity. Amongst the bulls include Kathy from ARK Invest, who is looking at each dip as a buying opportunity and has been snapping up a lot of our main plays at discounts. And you combine that with the furthering along of the new stimulus package and you have a whole storm of uncertainty. But here at ZipTrader, of course, we don't care about the uncertainty. We see through that uncertainty. But everybody's upset and they're like, oh no, this is a storm. It's a storm of uncertainty. We say no. It's a storm of opportunity. And with that, we must ask one simple question, and that question is what? What are the top 3 stocks for this week, Charlie? Well, in this video, we're going to be talking about just that. But first, I do want to make an important distinction between some of our strategies this week. So I want to make sure that you guys understand that there's a difference between long-term plays and short-term plays. For longer-term plays, you're looking to scout out undervalued plays at good prices, buy the dip, and then wait until they hit your price target. You're willing to hold out through the volatility and the storm in order to eventually realize that price target. And those are longer term plays because, well, they could take longer term to get to that price target. For example, a longer term trade that you could take is saying, hey, I see PLTR valued at $55. So that means that you can buy it at any point where the risk versus reward to 55 makes sense and then ride out the waves until it gets to your price target. But then shorter term trades, for example, day trades or a few day swing trades or even a few week swing trades, well, those are completely different tactic because you're trading off short-term movements. For example, during the COVID crash, I said that while the sell-off will eventually pass, we might as well make some moolah off it while it is selling off. And the way that we do that as traders is by buying either fear indexes or short funds. At the time that we started recommending doing this, it was February 23rd, 2020, and I said that it's time to start scouting out some short-term trades in SHVIX. And over the next 3 weeks, we had some of the worst crashing and fastest crashing that we had ever seen, which meant that our SHVIX play climbed from just under $50 to over $1,000. Like I said back then, you could be bullish on the market over the long term and then still say, hey, well, I'm a short-term bear. I think today's going to be bearish. And this is, of course, something that we've preached pretty much since the beginning of ZipTrader. In fact, I have a whole selection of downward direction ETFs in our briefings every single morning. Right now, futures are looking pretty bullish. But at the same time, we're probably going to have some more storm days. So during the storm days, it pays to be prepared. But the whole point is that you can respond differently. Your long-term plays, you got to hold through the storm and snap up at a good deal. The short-term trades, you can be taking advantage of a lot of this market fear by buying inverse ETFs, by shorting the market. And then on the days where the market bounces back, you could do the opposite. Obviously, based on your time schedule, you may or may not want to partake in that, but there's a lot of opportunities. Make sure that you have these in your toolbox so that you can take advantage of them. A few ETFs that I'd like you to know about are SQQQ, which shorts the Nasdaq. So if you are bearish on tech, you can use that. But UVXY is another one. We talked about this one on Monday. But basically, this is the new SHVIX, which means it goes up when fear in the overall market goes up. And SPXS is another one that shorts the S&P 500. But again, these are short-term positions. I don't believe that overall the market's going to keep going down forever. I think that maybe we have a couple more weeks of some storminess, and then you see some picking up. But anyways, folks, before we get into this week's plays, the only thing I ask of you in return is that you hit that ravishing like button, and also don't forget to subscribe. If you'd like to learn how to trade, would like access to our price targets, our daily morning briefings, and of course our private chat, I'll go ahead and put the link to ZipTrader U in the description below. Okay, folks, so the first stock I want to talk to you about is NIO. Now, NIO will have 2 catalysts this week. They're going to be reporting their earnings, and they're going to be reporting deliveries. Last week, we told you guys that Chinese EV competitor Li had beat on their own earnings and their own deliveries. And how we were looking at that as some early indication for how NIO might perform, because Li is participating in the same market, and if they're seeing huge growth, if they're seeing huge number beats, then maybe that's going to be true for NIO as well, because again, Li is sort of the ugly duckling of the 3 Chinese EVs that we talk about. And so Li doing well might be some early indication of how NIO is going to do. But it's also true that NIO beat on their own delivery expectations last month. So we're definitely going to see some positive numbers in terms of their earnings. But what we're going to be looking for is their next delivery numbers, projections for the rest of the year, and some closer looks at profitability. But so far, the data that we've seen from NIO and what we've heard from NIO this year is that despite their price just totally plunging and suggesting that this is a trash company, the company itself is doing really well. And they're also going to be participating in the Move America conference on March 17th, which many people are taking as an opportunity for NIO to lay out a strategy to come to North America, but that hasn't been confirmed yet. In terms of whether NIO is a short-term trade or a long-term trade, I would say you could trade it short-term. There might be some pre-anticipatory running up to earnings. You might have an original pop, but overall, NIO is one of our long-term plays. I see NIO at a much higher valuation, but because of the overall cooling off in the EV sector and because of the overall cooling off in every sector, you're seeing NIO at really cheap prices. So make sure that you're watching this guy. Okay, next is Workhorse. So as we know, Workhorse got beat down like a rabid dog last week with the overall market, but mainly because they lost the USPS contract. This is, in my opinion, a huge overreaction, and we said that last week, and we were going to continue saying that. And it looks like ARK agrees with us too, because they bought the dip on Workhorse not once, but twice. But the reason this is relevant right now is not just because of the dip, but because Workhorse is going to be reporting their earnings tomorrow pre-market. Now, I'm not super bullish on their actual revenue or profitability. I mean, that those should be bad. Regardless of whether they have the contract or not, that's not going to be affected. We expected that to be bad. But what I'm going to be looking very closely at is their guidance, and where do they see plans for getting other potential revenue sources moving forward. One of the things that I've liked about Workhorse from the very beginning is not just the USPS contract, which they didn't get, but also the fact that the federal fleet that Biden wants to make completely electric, and he wants to do it with just American companies, and there's not that many options. I think that with Workhorse, this could be an excellent opportunity. And so at these prices, Workhorse is getting into that no-brainer territory if they can just get a little bit of that demand. Even if they just get a little bit of the demand from the federal fleet, they also have some other clients. I see this as likely a little bit more in the longer-term trade category. Okay, so the last one I want to talk to you about is Mara. Lovely Mara. Now, as you know, Mara is a Bitcoin mining stock. And as Bitcoin panic sold off, we've had some cooling off in Mara as well. Cooling off may be an understatement. I think Mara got polar beared. But anyways, regardless of what Bitcoin does this weekend, it was picking up when I was making this video. But regardless, these are bigger picture plays. I mean, remember we called this out on the first trading day of the year, and during each cool off, we've said that this is still a buy. This is going to go up in the long term. But be warned, Mara in the past has always been a dirty tease and will continue to be a dirty tease. But let's say for a second that you're bullish on Bitcoin with me. Maybe you think that Bitcoin's going to have its rapid fluctuations for the near future, but overall you see it continuing the overall uptrend that it's had since pretty much inception. Well, let me tie together Mara for you. So Mara explains that their profitability is going to scale up dramatically as Bitcoin goes up. For example, if Bitcoin is at $30,000, that's $43.6 million in profit per month for Mara. If Bitcoin is at $35,000, that's $52.1 million per month for Mara. If it's at $40,000, that's $60.7 million per month. So this is one of those plays where if you think that Bitcoin's going to have a rocky road, but over the next year, Bitcoin should be trading at least the range it's in right now, if not much, much higher, then Mara starts looking like a pretty good play. And with prominent Bitcoin bulls like Cathie Wood staying as bullish as ever, we have pretty good company here. We're not alone. Mara, lovely Mara. I promise you she'll be a tease, but I think this is going to go up a long, long way. Lastly, I want to do the requested ticker of the day that you guys have asked me about. And that requested ticker is PLTR. PLTR is still looking very, very cheap. Once the overall market panic stops, this is going to be one of the biggest winners. And we are trading at a pretty deep discount already. To me, they have a great 2021 coming up. But it's also true that when the market is in panic mode, it does not care how good the company is. It just wants to sell. So to me, this is a long-term play that is an opportunity to buy up at a dip and then ride that price strength up to our price target at $55. I think you're going to be very, very happy with this play. The lower it goes, the better it is to snap up, in my opinion. Also, some other updates that you guys have requested. The CCIV, of course, got the merger, and they sold off as they changed some of the numbers, and I was a little bit disappointed to also see them delaying their production. It was originally going to be out in the spring, but apparently not so anymore. This was a huge factor with people buying up the share price prior to the merger decision because they were excited to see them rolling off the lot, and I am disappointed to see that they didn't appear to have come public with that info until after the merger decision was made and announced. Truth is, though, until CCIV and Lucid merged, CCIV holders are not technically Lucid shareholders, so I understand that they don't care too much about the relationship there prior to the actual merger. I just hope that they stop with these damn surprises, but I am very bullish on Lucid long term. Clove, looking incredibly cheap. They have earnings on Monday. They've really been hit hard. They first got hit by the short seller report, and then they got hit by the overall market overall. I'm confident, though, that they will come out of this as a winner, but it's certainly going to be a rocky, rocky road. But at these prices, pretty damn good deal. They should be releasing some earnings and guidance tomorrow. Okay, and that is it for the recap. Make sure to let us know in the comment section below what ticker you'd like me to cover in the next video, and we'll do that. If you'd like to learn how to trade, would like access to our daily morning briefings and our price targets, I'll put the link to ZipTrader below. If you'd like to get 2 free stocks and sign up with a great broker that allows both pre-market and after-hours trading, well, Webull is a great option, and I'll go ahead and put the link to that in the description below as well. Anyways, folks, that caps off the video. Go ahead and have a good one.